Okay, great. Okay. Thank you for joining, everyone. My name is David Paris. Welcome to this afternoon session on the impact of FinTech on financial and social inclusion as part of day 3 of the Network Science Innovation Week. I'm very fortunate to be the moderator today for a very good panel session that includes some very esteemed participants. I'll go through those with you now briefly. After I first set so the panel members are left to right on this slide, as you can see, Sue Douthwaite, who is formerly was MD at both Santander Bank UK as well as Virgin Money, and previously worked in a number of other financial institutions well known in the UK. She is currently, among various different roles, a non-executive director of a major building society in the north of England. As you can see, she's has quite a long and successful background in UK banking, business development, and go-to-market operations. I'll finish with the ladies next, and so I'll go all the way to the far right. And we're very fortunate to have Neda Gliptis, who is the Chief Client Officer for a very interesting core banking solution, 10X Future Technologies. 10X is one of the key new age core banking platforms out of the UK, set up by a former CEO of Barclays Bank, who's very well regarded in the industry in the UK. Leda is a very well-known speaker, writer, and academic in banking and fintech. Prior to going to 10X, in her current role, she also was the CEO of a well-known UK financial services strategic advisory and fintech incubator firm, 11FS, their kind of incubator for fintech. And then finally, we have the male in the middle, who is in the United States, Diego Codicini, currently on our advisory board at Network Science as well, but also the co-founder and managing director at TMD Partners, LLC. He has more than 20 years of experience in card and payments industry work in Latin America and North America, having worked with Citigroup, Visa, MasterCard, and American Express. What I'll do now is go back and set a little bit of the context for today's discussion on the prior slide, which I skipped over by mistake. So if we can go back to that slide, please. So this slide talks about major market trends. The information on it is from the IFC, the International Finance Corporation, as you know, the well-known multilateral lender. FinTech has the ability to and is improving customer engagement that is helping many individual consumers as well as small and medium enterprises as well as larger enterprises to achieve various business objectives. But there's two key points on this slide, and having seen this, I found this quite interesting, and obviously it deals with the aspect of inclusion, both financial and social. On the left-hand side, you see that the IFC estimates that out of 160 million firms across what are called micro SMEs, as well as the small and medium enterprises, 65 million out of the 160 million, or about a bit over 40%, do not currently have their demand for finance as part of their day-to-day business operations provided for. So when you're talking about both financial as well as social inclusion, there's currently a bit less than half of most of the available target firms that financial institutions could be working with, or lenders or investors could be working with, slightly under half of them aren't included in the system at present. So when we're talking about inclusiveness, that's an important additional target and upside. And to give some monetary value to those figures in terms of number of firms, approximately 5.2 trillion out of a total need of slightly under 9 trillion of total requirements is left unmet each year. That is only slightly under 60% of all total demand. So the key points to take away from this set of kind of macroeconomic information is that there is a long way to yet go in terms of including individuals as well as businesses in the financial system to help them meet their business requirements and needs. And obviously that constitutes both tremendous opportunity upside for all types of new age financial institutions as well as legacy financial institutions to assist with especially kind of helping economies recover from the recent impact of the COVID pandemic globally. So what we'll do now is go over to the panel members, and I'll go through with each one of them their thoughts about, especially some of the thoughts on this slide that talks about the level of number of firms not addressed by the market, as well as the total amount of their requirements that are not met, and just some initial, high-level thoughts respectively from them. So Sue, if I could ask you to kind of lead off with this, to give us, a brief set of thoughts from your experience and perspective on maybe how firms might best deal with this, financial service providers, and their technology, FinTech partners in helping to deal with these kind of challenges.
Yes, thank you, David, and good afternoon to everyone. Only this morning, I was actually speaking at another conference on serving the needs of SMEs for FinTech and so on, and shared a platform with the founder of a bank from Nigeria called Lydia Bank. They are using artificial intelligence right now to assess many of their potential customers who would never ever have got traditional funding. And what they're able to do is gain information about their customers from many sources and formulate a plan to lend money to people who may not even have a bank account. They then get a decision within 24 hours, even for small amounts of cash, starting at $150. And they're able to assess those customers and then introduce them to a bank who will then provide them with a current account, and they're giving them the funding. I think that in itself just explains to me the challenges of certainly parts of the world at the moment where millions of people are unable to access finance, but by using technology, financial services firms are able to support with some of the new technology such as artificial intelligence. It was an amazing presentation, and he's someone who's trying to meet this need right now today.
Yeah. Just real briefly, I'll ask you a follow-up on that because I find that fascinating. So obviously, here in the UK where you and I and Linda are, and then obviously in the States, FinTech is, very well, kind of all the rage, okay, I guess you might say. At the same time, you cited an example of something where we all know in the UK, there's a fair proportion of the population here, and that happens in other developed economies as well, that are also currently unbanked or would be part of this graphic. Do you see the potential for those types of solutions from less developed economies like Nigeria possibly to be reprised and imported and used in the UK, obviously with some tweaking around the edges?
I think the challenge in the UK, and I can speak from a traditional banking background, I guess, but the issues we have is the amount of legislation currently enabling or putting people off arriving in the UK with some brilliant ideas. The government is legislating to ensure that the traditional banks are including all people, social inclusion, an aged population and so on. And so they are having to address their customer base at the moment. However, current legislation is putting people off, I think, bringing some of this new technology into the UK, certainly in the form of banking licenses. There are 24 banks in the moment waiting for a license in this country. However, what Lydia are doing is they're a tech company. They do mobile phones and they are providing one service. So maybe that's a way to break into a market to enable all to access finance.
Okay, great, good. There's one of the participants, if you don't mind, before I progress, Lita and Diego with you, one of the participants, Yugesh Kumar, has raised his hand, and I guess, Yugesh, you'd like to propose a question? Yeah, can we have a question from Yugesh Kumar? I don't know whether, Sandy, you have the ability to display that or not.
Yeah, we've unmuted Yugesh, but
okay, let me do this. I'll carry on, and you can try to solicit that if you can. If you're unmuted, then please go ahead and feel free to make a point to raise a question.
What we could do, David, is requesting all the attendees, if there are questions, there is a module Q&A. You can write all your questions out there, and we'll take it from there.
Great. Okay, great. So we'll come back to you later, you guys, through that module. So, Lita, if I could go to you, obviously, as Chief Client Officer of one of the FinTechs in the UK, this type of challenge about the market proportion that's unaddressed and the size of the prize, so to speak, how are you addressing that, and what are your views on it? Not merely from your current position, but then also, the prior work you did at 11FS and others.
Well, actually, it's the work I did before in my, God, almost 20 years as a banker that I think comes in handy when we look at that, because frankly, I'm almost surprised it's the numbers aren't even more terrifying, because the reality, as you well know, is that historically, and I don't mean back in the depths of history, but I mean since the inception of segmented banking to this very day, SMEs are notoriously underserved everywhere. Banks either package up retail banking plus setup. So essentially you get a service as if you were an individual, not a business, but you have to pay for the privilege. Or they try to slim down corporate banking. And I have worked in banks where we would offer a major airline and a corner shop selling peanuts, pretty much the same solutions, which means that you leave your SME segment completely underserved. And as a result, you leave their needs misunderstood or not understood at all. And the sort of financial literacy of your SME segment is lowered, et cetera, et cetera, et cetera. So I'm surprised that the numbers are not even worse than that. The traditional players have not considered this segment profitable and therefore have not really actively gone after them. So the opportunity is immense. But who is this opportunity for? I am not seeing the startup world falling over backwards to serve SMEs. But what I am seeing, and I need to disclose that I am on the board of a company called Simply Pay Me that is designing payment solutions for SMEs. So I have a vested interest in this space and in their success. What I'm seeing is companies like Simply Pay Me that come in, home in to the point Sue was making earlier, to a particular painful step in the process. So in our case, it's invoicing, payment processing, and the investment that would take. And then partnering with big players to make it easier and cheaper for the big players to service the SMEs using those tech solutions that combine reach, ease of access, lower unit economics, and then homing in those needs that have not been understood. The opportunity is massive, and I do think that it will be partnerships of companies like Simply Pay Me with the big players that will actually start closing that gap.
Yeah, And when you talk about big players, are you talking about other major G50 type banks? Are you talking about systems integrators? Are you talking about other existing technology
It
products?
could be either. So in our case, it's a partnership with PaySafe and MasterCard.
Yeah.
It's that balance of a large player finding a niche that doesn't cannibalize their offering, and
Yeah.
a startup coming in not to challenge but accelerate.
Okay, good, great. All right, fine. Thank you for that, and very insightful. So Diego, can we go over to you, and especially based on your experience in Latin America, as well as North America, plus your experience in the card and payment side, and obviously you'd have massive number of SMEs that you'd be dealing with, more conventional, card merchant type operations and the like. Can you also kind of add your perspective on it, which I think will be obviously in addition to the more European, UK, and African aspects that we've addressed thus far?
Absolutely, David, and thank you. I completely agree with Leda. It's a huge opportunity in the SME sector. Actually, in my experience working with a financial institution, actually with a big bank, and also working with the payment networks, I was able to see firsthand the challenges that the SMEs pose to these companies, right? Because they are kind of this in between the consumer and the corporate relationship. So it's a space where you try to sell them either from the corporate side using the tools and technologies that support your larger customers, and that is a big challenge and it doesn't work, or you try to adapt your retail systems and platforms in order to address those needs. And it's not a good option either, right? So what I've seen in the past, and actually, the combination of digital technology and the penetration of smartphones is enabling the development of new platforms like the ones that Lida is working on, and many others, where now it becomes profitable to solve this particular segment, and you can customize, and you can be in the right price point so that you can address this segment at a price that they will be able to afford and at a level of profitability that it makes it attractive to you. There are a couple of examples, and going back to my experience in the payment space, one of the big challenges for financial institutions was to provide, for instance, commercial cards to the SMEs, right? So these are the typical T&E card, travel and entertainment cards, the sorts of the American Express of the world. It was really difficult to create a value proposition for this segment in terms of credit cards or even debit cards. And we see startups like Brex and Divi in the US, and actually in the last couple of weeks, another big startup, Bill.com, acquired Divi. These companies started from scratch. They don't have legacy systems that they need to adapt, and they created a commercial cards platform that perfectly suits the needs of the SMEs. So definitely I see more of these startups focusing on this segment. Some of them are going alone and trying to capture this segment without having to partner with anyone. I do think that some partnerships are going to happen, but this is something that is happening right now, and it's going to become bigger and bigger.
Yep. Okay, great. That's fine. So what I'd like to do now is kind of phrase. We have some questions that we came up with amongst ourselves, and I'm going to phrase these to the panel, and then go back to the audience source questions a bit later. So first of all, to the panel, how much do you think that FinTech, and I use that in inverted commas, quotation points, as it's most commonly understood today, how much do you think FinTech focuses on social inclusivity as a key design principle? So What I'd like to do is, Leda, since
Yeah.
you're involved with a FinTech technology provider directly at present, and then I'll go to Diego and Sue later. What are your thoughts on how you bring social inclusivity into the design principle part of the services that you take to market and the technology that supports that?
So I'll start by saying that FinTech is a term that almost 15 years into its existence, it doesn't mean very much anymore because it means everything. So when we talk about FinTech, what do we actually mean? We tend to assume a sort of ethical imperative and more inclusive ways of working. But the reality is that new technologies can be used for good or evil, right? So the fact that a company falls into the FinTech bracket doesn't mean that by default, it will be oriented towards social inclusion, financial inclusion, and fairness. If that is your intent, then you are in luck because we have tools that reduce total cost of ownership. So the way we are doing it as an infrastructure player, because at 10X, we build capabilities. We are invisible FinTech. We work in a way that allows our clients and our partners to deliver solutions to their customers and their communities faster, better, cheaper. But our view is that the piece of the puzzle that we sit on is the pit where we can reduce cost of ownership and speed to market. And that's how we enable the proposition to be faster, cheaper, better. But that piece then is part of the covenant is that whoever works on top shares that path forward, passes that path forward. I think talking about inclusion more generally, I do feel that we need to take into account what's ours to solve within the parameters of financial services provisions and what we're incentivized to solve for by the way that partnerships work and what we should be thinking about but aren't, right? So I think that we're absolutely incentivized to solve for speed and overall cost. That is a barrier for a lot of financial services participation for both individuals and businesses.
Yeah.
And I would say that the vast majority of players I see in this space, both at the front end and at the sort of the back end of the stack, are motivated by speed more than by that reduction of the overall cost of ownership. But I definitely expect that will start changing, particularly on the back of COVID. What we're not talking about enough, and I was actually involved in a discussion on that last week, is that the biggest elephant in the room when we talk about inclusion isn't access anymore, it's poverty. Yeah. It's qualifying for financial services, not because you don't have an account, but because there's nothing in it, either as a small business or as an individual. Do we have the technologies to reimagine credit? Yes. Do we have the technology, the capability, and the data access to reimagine data scoring and credit scoring and access? We do. But is it something that FinTech could and should solve for? Not without government, right? So I think there is an opportunity for a discussion on how can we be an accelerant, but we need the regulator at the table, we need government at the table, we need this to be a holistic view. Can we? Yes. Are we doing it? I would say not yet, but we absolutely should.
Yeah, okay. That's a very, very interesting point, and it aligns interestingly with some of the thoughts that Sue expressed earlier. So you're my next convenient target for following on in that question. The aspects that you raised about legislation possibly being, at present, at least in the UK, maybe being slightly disabling or not as enabling as it could be, you know, obviously that chimes a bit from some of the comments that Leda made. Do you have thoughts about how legislation or regulation or some of the thoughts that Leda made might be improved in the UK or the EU or other markets with which you're familiar to deal with that social inclusivity aspect that is not solely the responsibility of FinTech providers, as Leda, I think, rightly observed?
Yeah, I mean, Leda is driving this debate to what I think is right, is a more altruistic part to financial services across the world. We'll come to that in a minute, David, I'm sure. But, you know, if I look back at my background in traditional banking, everything was driven by profitability and returns. And in fact, you know, to be a success in fintech, you need to have investors, you have to drive a return. But the challenge COVID has brought to us all, I think, and Leda referred to that, is about this element of balance in the world. So to grow economies, global or even local, everyone has to have access to funding. The brilliant ideas, the next generation of entrepreneurs aren't necessarily someone who's been university educated. It might be someone who today has no access to finance. So it is a greater good debate. And Leda is right that actually only regulation or government legislation, even around the things like ESG, that will be a good pointer for financial services and an industry, because we will have to develop new ideas around the communities for which we serve. And really, without that drive, we are not going to get a wholly inclusive society, or certainly a wholly inclusive financial society.
Mm-hmm. Okay, great. Good thought. Good thought. So Diego kind of saved the best. I wouldn't say the best for last, because the ladies have had very, very good observations.
So you can keep it just the last. I gotta be just the last.
I won't be comparative anymore, okay? But you know, given your basis in Miami, understanding the Latin American as well as the North American markets, you know, and obviously there'd be different levels as well as definitions almost of social inclusion. You know, what are your thoughts on this topic?
Yeah, I think that Lida and Sue, they both touch on the fact that to a certain extent, financial inclusion and social inclusion must go hand in hand in order to maximize the benefits to society, right? And actually, you know, there are many social studies performed in developing economies in Latin America and Africa that show that if individuals are both financially and socially inclusive, and what does that mean, right? On the financially inclusive means that they have access to loans, they have access to mobile banking, and other financial services. And on the social inclusion, they have access to education, they have rights to property, access to leadership roles, and gender equality. When you have those elements at the same time, that is where you maximize the benefits of financial inclusion. Why? Because you start seeing higher levels of entrepreneurship. And that is what you really want to develop in these countries. You need to provide the right elements in that equation so that people can create, can innovate, can be entrepreneurs. So definitely when a fintech, and actually, you know, I was going to go into some examples of how fintech is reaching out into the social inclusion space, right? I mentioned education. You know, education is an element of social inclusion. Some fintechs and actually some financial institutions, even the traditional ones, are stepping in to close that gap of education, and they are going beyond just offering financial services and offering financial education. And within the fintech space, actually, there is a branch it's called EdTech, which is how we can use the technology that is driving fintech to make education as easy, as intuitive, and easy to distribute, that is one of the other key elements here, right? You know, technology is helping with lowering the cost of distribution of whatever you do. If you are in the financial services, you can distribute financial services through mobile phones anywhere in the world, as long as there is a mobile phone and there is a connection to the internet. The same thing you can do with education. So this is kind of an adjacency in the fintech space to move into education, as long as it benefits the overall value proposition. So the key point here is financial education financial inclusion needs to go hand in hand with social inclusion.
Okay, great. Yeah, no, I think that education point is quite important and key. So, Sandy, I'm going to kind of ask you that first question that we got from the audience. Have you been able to kind of recover or raise that?
Yep, David. So there is a question from Pablo. Would you like to take that?
Yeah, I've seen that one. Okay, fine. So Pablo, you had a question that was addressed to Leda, and Leda, Pablo's question was an interest in how you develop credit profiles for potential clients or targets that have not traditionally been banked in any way, either on the deposit balance side or having taken credit products in any shape or form previously. I guess interested in some of the concepts.
Yeah, no, it's a very good question, and I'll give it two answers. The pragmatic and the art of the possible. So at 10X, we work with heavily regulated banking partners. So the way we produce credit profiles is fully in line with what the local regulation and their own appetite entails. So the technology serves the imperative. That varies by country. So for instance, in Norway, your credit profile needs to be harmonized across every interaction you have with every financial provider, and it needs to be the same because it's government issued. So you don't get to decide your risk appetite, the government does. In other economies that are more aggressively capitalist, the institution gets to make that choice. So from our point of view, we create the tools to take whatever inputs the client wants us to take, but we are agnostic as to what that should be, because ultimately the risk and the reward is our clients. It is possible to take inputs from real-time credit behaviors. It's possible. I have in the past worked with a client in Latin America, actually, who used almost like real-time spending behavior as a way of accelerating creating a credit footprint for someone. So if you can actually crunch the data of someone behaves on their day-to-day bills, on the way how close to the wire they behave, you can create a lot of very rich insights into how someone acts around money. And it was a decision by a financial services institution to treat that as valid. But I think we have some fascinating examples that didn't need FinTech to work, such as Mohammed Yunus's Grameen project, where people who had no footprint, who were considered irrelevant, the invisible poor women of rural Bangladesh, and by creating a system that the Grameen project believed in, they created something that wasn't just sustainable in terms of financial inclusion, but became actually highly profitable. Mm-hmm. So, but the point is that you needed someone to believe in it and underwrite it. It wasn't a technology problem, it was a human faith problem. Yeah. Having had the runaway success that was the Grameen project, we have no excuse to not provide tools and solutions and creative access, is my personal view.
Yeah, David, could I just come in to support some of those points as well? We're not just talking here either in the world right now about financial services companies. Think about the mobile e-commerce websites that we have emerging from China, Alipay and so on, Ant Financial. Everyone has to buy and sell goods. Most people have access to mobile technology, but not always in rural parts of the world. Nevertheless, they're able to gather information on people's purchasing and use that also. The biggest challenge pace of access to funding faces is the underwriting part of that. How do you assess whether someone is going to pay you back or not? And people like Alipay are using the shoppers, the purchasers' footprint to measure and understand that in a different way.
Yeah, and certainly, I mean, I'm familiar, I'm fortunate enough to, at least pre-lockdown, travel fairly regularly to Kenya. So I'm quite familiar with the success of M-Pesa there, as well as in a lot of other parts in Africa. And it's an excellent example in addition to the Chinese, Asian examples that you cited as well. I mean, Diego, we're kind of talking about areas in which you have some experience as well. So I'd be interested in your views on this question also.
Yeah, well, that's the point that Sue brought to the table is very important. There are other players like MNOs, mobile network operators, that are collecting so much data on these individuals that are otherwise invisible. And now that data can be used, right? And it can be used in addition to using artificial intelligence and machine learning to extract more value from that data. And that is creating opportunities to start delivering to these invisible individuals some basic tools. And the first tool that usually you give to an individual is a payment tool. And the moment that these individuals receive a way to pay different from cash, that's going to be an electronic transaction. And that electronic transaction is even more data. And this is how you start building this profile, right? This footprint. So you get some information that is not related to financial transactions, is coming from the MNO, but then suddenly you start seeing some traction in electronic transactions from these individuals, and then you start, what is the next step, right? So you start giving payment options, and then you start giving microloans, and so it's a progression, and there are very good success stories of these, and you mentioned M-Pesa in Kenya, David, and it's definitely M-Pesa is a pioneer on that. And there are other companies like Digicel as well that are moving into the digital wallets, the mobile wallet space in the Caribbean, in Asia Pacific, and it's exactly the same approach. You start providing some basic payment tools to your mobile customers. You start building your profiles based on what you see, and you keep moving along the line of providing more and more services. You start with microloans, you start with micro investments. Suddenly you are in the SME space, right? So yeah, it's happening in many economies.
Yeah. Okay. Great. Fine. So what I'd like to do now then is I'll go back to some of the questions I had previously. Sandy, I presume you haven't been able to recover that earlier question out of the audience. Is that correct?
Yes, David.
Okay, fine, great. So Sue, I'd like to move with you on this one, and then kind of go to the other panelists. In the UK and the EU, obviously, in the last number of years, you have new kind of regulatory regimes, open banking, payment services directed to, and then more recently, post-COVID, well, it started pre-COVID actually, but it's been strengthened post-COVID, the so-called vulnerability criteria by the, I think of the FCA as opposed to the PRA, that deal with aspects, well, they don't deal exclusively with aspects of inclusivity, but my query is, how can those types of newer regulatory regimes possibly be used to speed financial as well as social inclusivity?
Wow, well, if I really know the answer to that, I should be the governor of the Bank of England maybe right now, or the head of the European Union. However, there is a point about that. Interestingly, the split of the UK away from Europe has raised a number of questions about the regulatory regime in the UK. And I work with the CBI here as well around the financial services group organisations, who are desperate for a relaxation to enable open banking to be fully embraced. There is currently maybe from customers still a mindset of a lack of trust in open banking per se. So there's a whole education process that needs to be undertaken around that too, but actually also pressure on the UK government to reduce some of the regulatory challenges and barriers that we've had, which were born out of poor behaviour a decade or more ago. And so I think that will change, but it will have to change to enable us to embrace open banking in the way we want to.
Okay, great. Yeah. And then Lita, I'll ask you the same as well, if you don't mind. And then I'd like to bring in, and then I'll phrase this to Diego, a question from the audience. Okay, so.
Oh, Diego gets his own question, but we have to share. What?
Don't be jealous.
I'm a little jealous. I like being special. I agree with Sue, and all I can add to that is, well, I can add two pieces, but they sort of just elaborate on the point already made. One is that it needs intent. This is not something that will be a side effect of business as usual, and it's not going to be a side effect of pursuing other priorities. Having a sort of financial services industry with a conscience will need to be a banner that the regulators choose to fly. Now, what we have seen over the last, I'd say about 10 years, is a pretty radical change to how most regulators perceive their duties. Because if I think back to 20 years ago, when I started my career in banking, it was very much checklist-driven things you were not allowed to do. But in the last 10 years, as the regulators in the more mature capitalist economies have started really understanding the technical capabilities of what is possible, they have started shifting away their own prudential understanding away from boundaries towards aspirations. So we're seeing that quite a lot of the regulation is less about you're not allowed to do this and more about you should be achieving this. And it's a lot about consumer protection. It's a lot about the quality of the information consumers are getting, the way that pricing needs to be presented. To me, all of it is pointing in, whether it comes in the insurance space, the trading space, or retail banking, actually regulatory reorientation is pointing towards a tenor change in what the regulator is willing to prescribe in terms of outcomes, what they understand is possible and how they're willing to act around it, and how far they're prepared to go. So I think we're in a good place in that the journey has started, and particularly in places like the UK, the European Union, Australia, so some of the Southeast Asian economies like Singapore, you're definitely seeing that direction of travel. But it will need to be explicit, deliberate, and clearly articulated for that next step. I don't think it's beyond the realm of the possible, though.
Yeah, fine. So what you described, if I can paraphrase it, is a move from what I've kind of written down as maybe a past of negative proscription by regulators in some instances, increasingly more towards positive guidance-led type of approaches to regulation. Okay. Okay, great.
Yeah.
So Diego, I've got a question for you from the audience, okay? And it relates to blockchain. It says, what is your view around blockchain innovation within fintechs and whether it's being used to the best of its ability to benefit society overall? And again, this tends a little bit towards the altruism side of the equation, as we were talking about earlier, but be interested in your views on that in a fairly short period of time, because we're running out of time.
Sure. So let me first clarify that I'm not an expert on blockchain technology, but anyways, I do see a future of this decentralized way of managing transactions, which is, I think, what is the impact mostly in fintech. I'm not sure how much time it's going to take. I do think that the decentralization model is going to be a successful model. There are many things, I guess, that need to be figured out in terms of transparency, in terms of making sure that it's a reliable platform. But many of the things that are inherent to blockchain technology, like real-time transactions, I mean, that is huge, right? Today, even though there are many different ways that you can do transactions in near real time, there's really a lot of limitations when you go on cross-border transactions to really, make it happen on the spot and have the settlement of that transaction happen in real time. So as long as blockchain will take us there, everyone wants to go there. And so I think it's, my bet is just a question of time, but that is going definitely to happen. And actually, I have just a quick comment on what Leda and Sue discussed before in terms of regulation. And I think that, just adding to what they said, some of the things that I see happening with regulators is that they are not only now more positive in terms of enabling technology to solve, these problems that we're trying to solve, but there are clear signals out there that they are really meaning that change, right? And we see many regulators pushing for fintech laws, in particularly I'm looking at Latin America and the Caribbean. Many regulators implementing sandbox environments so that they are inviting disruptors and innovators to play around in a very controlled and secure space, demonstrating that their technologies are good enough and can be trusted. So that all is really good, right? Because that is a very proactive approach in facilitating innovation and disruption. And this is happening in Mexico with the fintech law, in Barbados, in Jamaica with enabling sandbox environments so that companies can test their proof of concept. So that's all really good. That's all really good. It's pointing in the right direction.
Yeah. Okay. Sandy, how is your reception working at your end? Because I know Diego was breaking up to me on that last parts of the last response.
No, I think we're quite good, David. I think it's your end. It's an issue, but otherwise it's all okay.
All right, fine. And just to be clear then, Sandy, obviously we're kind of slightly past the 45-minute mark. Should we do one more round, or how would you like to handle it?
Yeah, there is one last question. If you can just take that in, a quick reactions from the panelists. I think it is an important question, and then we can give for closing.
Was that the anonymous one?
Yes.
That was the one from anonymous, correct?
Yes, David.
Okay, right. So fine. So Leda and Sue, you guys get pride of ownership on this one, okay? So, and I'll go back to Sue first in this. Sue, the question relates to the increasing use of mobile with regard to payments and other kind of banking transactions, and concerns about security. It could be physical security of the devices. It could be other aspects of data security or transaction data. Do you think that fintech startups are doing enough with regard to the kind of security requirements to properly execute payments transactions, or you think that they could be doing more?
Okay, and I'll slightly rephrase my answer to that question in that I believe a lot of the payments companies, a lot of the new fintechs have been driven out of the challenges faced by financial crime and negative unlawful activity. So a lot of the brilliant innovation that's come out of Africa, South America has been driven by a desire to protect consumers and to understand and keep them safer. So if anything, I think a lot of the new fintech organizations that I'm seeing right now have been built out of that desire to protect and to ensure the growth of economies where previously there'd been huge amounts of criminal activity.
Mm-hmm. Okay, great, good. Okay, Leda, hopefully I phrased the question and obviously Sue slightly rejiggered it. Your views on that?
My view, again, is very similar to Sue's, but I want to go back to what I said earlier about cautioning against using fintech as a meaningful blanket term. You wouldn't say that all banks have the same quality of information security any more than you could say that all fintechs have the same approach. There are thousands of companies in this space, and some are undeniably better than others. But I would absolutely caution against the view that was there very much 10, 15 years ago, that fintechs are sort of scrappy and rough and ready. They are technology first, deep expertise companies. And I have never seen a company in this space that was dismissive of security requirements. Now, pen testing and resilience testing is always important. And some are definitely better than others. I would say that it's dangerous to ask the question about the entire industry and expect a sensible answer. But if you do, the only sensible answer is the one that Sue gave, that these companies are in so many cases designed to solve those problems. Because for those of us who have grown out of traditional banking, for most of our careers, we were presented with a choice between flexibility and stability stroke security. That was always the case, particularly 10, 15 years ago. If you wanted to be flexible, you had to compromise on security or robustness. And what the fintech world has achieved is to shift the mental model. You don't have to make that choice anymore. The technology can give you both. How good you are in executing depends on how good your tech team is.
Yeah, exactly. Less of a zero-sum game in that sense, in that you either deal with the security or the flexibility. And in fact, fintechs offer a positive way to achieve both so that it's win-win overall.
Precisely.
Yeah, great, good. So I think, Sandy, we're, I think 50 minutes some odd into the discussion. I think we probably should close it here. And first and foremost, I'd like to thank the panelists. I really enjoyed this, and it was no problem as a moderator driving the conversation. So I'd like to really extend, you know, my deep to Sue, Lita, and Diego for their, you know, taking their time, taking their effort, and really providing a lot of good constructive insights that hopefully the audience and attendees enjoyed as much as I did.
Thank you for having us.
Great.
Thank you, David,
and Sandy.
Lita, Sue, Sandy, thanks a lot.
Thank you very much. It was absolutely fascinating conversation. Thank you, everyone. Thank you, the attendees as well. Thank you for participating, and amazing set of questions. I'm sure you also enjoyed as much as I did. Just a reminder for everyone, this is day 3 of our Deep Tech Innovation Week. We have one more day coming up tomorrow, 3 more sessions to go focused on sales tech and HR tech. All those who are interested, please join in for those as well. Looking forward to more participation.
Yeah.
Thank you very much.
Thank you
Thanks,
all.
everyone. Thank you.